Assalamualaikum. My name is Najwa Ashikim Zaharuddin. My matrix number is A22A0126. Today I will start with introduction of regulation and supervision of Islamic financial institutions. Regulation and supervision of Islamic financial institutions (IFI) ensure that these institutions operate in accordance with Islamic principles and comply with financial laws. This oversight aims to maintain stability, protect customers, and uphold Sharia compliance in all financial activities. Regulatory bodies oversee IFI to ensure transparency, proper risk management, and adherence to ethical standards, fostering trust and integrity within the Islamic finance sector.
For the global regulation, the first one is Sharia compliance and governance. Islamic financial institutions (IFS) must adhere to Sharia principles, which prohibit interest, excessive uncertainty, and investments in prohibited industry. Globally, the regulation and supervision of IFS often involve establishing Sharia supervisory boards at both the institutional and national levels. These boards consist of scholars who ensure that all financial products and operations comply with Sharia law. Regulatory frameworks like those from Accounting and Auditing Organization for Islamic Financial Institution and the Islamic Financial Services Board provide standards and guidelines for governance, accounting, and risk management specific to Sharia compliance. The second one is integration with international financial standards. To operate globally, IFS must also align with conventional financial regulation while maintaining their unique characteristics. This dual regulatory framework involves complying with international standards such as those from the Basel Committee on Banking Supervision for capital adequacy and risk management. Regulators adapt these standards to fit the Sharia compliance context. For instance, the IFSB issues guidelines that harmonize Basel standard with Islamic financial principle, ensuring that FS remain robust and competitive in the global financial system while adhering to Sharia principles.
The regulation and supervision of Islamic financial institutions are typically managed by a combination of national regulatory authorities, central bank, and specialized Islamic finance board or committees. These bodies ensure IFI operated according to Sharia principles, maintain financial stability, protect consumer, and promote industry development. The regulation and supervision of Islamic financial institutions are found in all countries in the world. For example of national regulation in Malaysia is Bank Negara Malaysia as primary regulator and supervisor of Islamic financial institutions, while Sharia Advisory Council established by BNM provide Sharia ruling and guidance to ensure IFI operation completely with Islamic principles. Regulatory authorities have several key functions in overseeing Islamic financial institutions. They ensure IFI are properly licensed and supervised, adhering to both financial and Sharia regulation. They establish and enforce rules for Sharia compliance and develop risk management framework specific the unique risks of IFI, such as profit-sharing investment account. Consumer protection is a priority with effort to ensure transparency, fairness, and ethical conduct. Finally, they promote an innovation of Islamic financial industry through positive policy.
I will present about key regulation and standard. 1. Sharia compliance, ensuring that all financial activity comply with Islamic law Sharia, prohibiting interest riba, exercise anxiety gharar, and investment in illegal activity forbidden. The Sharia board oversee and certify compliance within the institution. 2. Regulatory framework, central bank and regulatory authorities set specific guidelines for Islamic finance. Law and regulation are designed to be integrated with the conventional financial system while accommodating Sharia principles. 3. Capital adequacy standard, based on Basel III with adjustment for Sharia compliance, include capital buffer, leverage ratio, and liquidity requirement to ensure financial stability. 4. Risk management, emphasize on Sharia compliant risk management tools, banning speculative instruments, and mandating a profit loss sharing mechanism. 5. Governance. Some corporate governance practices are mandated, including transparency, accountability, and the role of the Sharia board in the decision-making process.
Hi and Assalamualaikum. My name is Nur Zaitun Hafiza binti Nur Asmawi. My matric number is A22A0244. Today, I want to present about the Sharia compliance. First, it adherent to Islamic law. Islamic financial institution must ensure all activity, product and service comply with Sharia principle, avoiding riba, ghaira and investment non-compliance business as interpreted by qualified scholar. Number 2 is Sharia Supervisory Board. Every Islamic financial institution must have a Sharia Supervisory Board (SSB) of Islamic scholar knowledgeable in both Islamic law and finance. The SSB ensure all financial product and transaction comply with Sharia principle by providing guided, reviewing contract and issuing fatwa. And the last one is governance and oversight. Regulatory bodies overseeing Islamic financial institutions ensure robust governance scrutiny to monitor and enforce Sharia compliance. This includes regular audit, inspectors, and assessment to verify that operation align with Sharia principle.
Assalamualaikum everyone. Today I want to discuss about financial supervision of Islamic financial institutions. Firstly, compliance with Sharia is ensured by internal Sharia bodies with financial institutions, consisting of scholars who issue guidelines and rulings on financial matters, and by regular independent Sharia audits to verify compliance with Sharia. Secondly, consumer protection. It ensures fair treatment of consumer through transparent and honest communication about financial product and service and effective dispute resolution mechanisms, often involving Sharia scholars to ensure that solutions are in line with Islamic principles. Next, risk management. It includes capital adequacy, which ensure that Islamic financial institutions have sufficient capital reserve to absorb potential losses. Liquidity management, which ensure adequate liquidity to meet obligation and manage short-term funding needs and credit risk. Then, the regulatory framework includes national and regional regulators, such as central banks and financial service authorities, which are responsible for developing and enforcing specific regulations for Islamic finance. Lastly, market conduct and integrity include continuous market surveillance to detect and prevent market manipulation, insider trading, and other unethical practices, as well as transparency and disclosure regulations that require clear and transparent disclosure of financial information.
Today, I would like to discuss with you about the challenge in regulation and supervision of Islamic finance institution. Firstly, we have a Sharia compliant. Compliant with Sharia law is divided into elements. Firstly, the Sharia board. Each we must have their own Sharia board for the purpose of ensuring compliance with Islamic law. However, the existence of ruling across different institutions result in inconsistencies interpretation. Secondly, Sharia standard. Sharia guidelines that are not clear and detailed in-depthly are become an issue for IFIF to create a uniform regulatory framework across Islamic institutions. Next, risk management. Unique risk profile. This risk management requires a specific framework for each element in it. So, the IFI will be faced with transform commercial risk and rate of return risk. Liquidity management, as we know, in Islamic finance is not allowing the institution to be involved in the benefit instrument that are the main conventional tool for managing liquidity. This indirectly means Islamic institutions need to find more efficient alternatives to overcome it. Then we also have the product innovation and approval. Product development. Every product that in release requires a long and complete time to ensure that is line with the demand for the Sharia. Not only that, it also needs to get regulatory approval for approach of the market product. Lastly, we also have the market development. In addition, awareness and education among the regulators, market participant, and public compliant this situation and form them to continuously provide educationally exposure for this matter. Market infrastructure. The development of Islamic finance market instruments such as Sharia compliant stock exchange and liquidity facilities is still ongoing in many regulations.
In conclusion, the regulation and supervision of Islamic financial institutions are essential to uphold Sharia principles, ensure financial stability, protect stakeholders, and promote transparency and trust within the Islamic finance industry. These measures play a crucial role in integrating IFIs into the global financial system while maintaining their unique ethical standards. That's all from us. Thank you.